Welcome back, and today we will discuss about section 32. Yes, section 32 in this pgbp chapter is really important. Now here section 32 talks about depreciation. Now in accounting many a times you discussed depreciation, right? There, when due to wear and tear of the asset, due to regular usage, obsolescence, so some depreciation should be given every year, that we discussed in accounting. Same way in income tax also we have to give depreciation. Okay. Now to give depreciation, can we give depreciation on revenue expenditure like salaries, wages, office rent? No, right? So we have to give depreciation on capital assets. So here they did not use the word capital asset or fixed asset. They used simply asset. But we have to remember that we are talking about fixed assets only. Okay. From accounting perspective, it is fixed asset. Here we will call it as asset, but it is fixed asset. Okay. Right. So on assets we will give depreciation. Now what should be that assets on which depreciation should be given? It can be building, it can be furniture, it can be plant and machinery, it can be intangible assets like patents, copyright, trademark, know-how, franchisee, license, or any other business or commercial right. Like there are something like loom hours are there, route permits are there. So these are any other business or commercial rights. I'll tell you, like that private travels are there, na? Road travels, passenger travels. So that travels have to take licenses from the government, and that is route permit. And if they want to earn profit, they have to take that license permits from the state governments. So that's why route permits is any other business or commercial right. Please remember that goodwill is not a depreciable asset. Goodwill is not a depreciable asset. And again I am telling you, goodwill is not a depreciable asset. Those people who are studying this course and studied textbooks from direct tax from last few years will feel that, Arey, goodwill is also intangible asset, sir. Arey, it may be in accounting. In accounting, goodwill is an intangible asset. But in income tax, goodwill is not an asset. And on that, no depreciation. Okay, clear. Now, land is always an appreciable asset, right? Its value continuously increase. So, there is no concept of depreciation on it. So, on these assets, what we discussed till now, like building, furniture, plant and machinery, intangible assets, we claim depreciation. But to claim depreciation, we have to satisfy two conditions. First thing, you must be the owner of the asset. If you are not the owner, can you claim depreciation? If you are a tenant, can you claim depreciation? No, right? So you must be the owner to claim depreciation. Now, are you a registered owner? Are you a beneficial owner? No problem at all. You can claim depreciation even if you are a registered owner or a beneficial owner. But you must be the owner, that's important. You can be part owner, you can claim part depreciation. If you are a total owner, you claim total depreciation. No problem at all. Okay, to make you understand, I'll tell you. Suppose I and my friend purchased a building for business. 10-floor building, 4 floors for me, 6 floors for him. Now he is also doing, I am also doing business. So on the 4 floors which I am the part owner, I can claim depreciation. And my friend is the owner for 6 floors. So for that part, he can claim depreciation. So even if you are a part owner, you can claim depreciation. No problem with it. So I said there are two conditions. First, that you must be owner. Whether you are a registered owner, beneficial owner, part owner, no problem, you can claim depreciation. Next thing, that asset must be used for business or profession. Suppose you are using it for business and profession, you can claim depreciation. But if you are not using for business and profession, how can you claim depreciation? You cannot, right? That's what I wanted to convey. Now come to some special points which we have to discuss. Please understand, owner can be part owner, owner can be beneficial owner, owner can be a registered owner. No differentiation. Now those who want to know who is registered owner means on in whose name the property documents are, right? The ownership documents are. Suppose I purchased a laptop in my name, then I am a registered owner. Suppose I give the laptop to my employee Divya for her use totally, then she becomes the beneficial owner. Are you able to understand? Many a times in house property also, I purchased the house property and I am the registered owner, but I gave it to my chicha for staying in the house property, my chacha, my father-in-law to stay in the property, so he becomes the beneficial owner. That's how you should understand. Now come to the important note, second note, which is very, very important for you to understand, that we have to claim depreciation. That's a compulsory thing, right? Eighth point you see. Eighth point I am talking about. You have to claim depreciation. You cannot say that this year I will not claim depreciation, next year I will claim depreciation. This is not allowed. It is a mandatory provision and everybody who are in business have a depreciable asset should claim depreciation. Clear to all of you? Yes. Now let's see the seventh point which I am talking to you now. Not in the same sequence I am talking, but okay. I feel you are able to understand. Suppose there is a company called as Bharat Heavy Electronics Limited, BHEL, ONGC. Now their factories are set up outside outskirts, right? Very much away from the city. For employees to travel to that place becomes difficult. So what they did, they set up residential quarters near to the factory. Now the employees are staying in the same quarters. The company collects nominal rent from the employees who are staying in the quarters. Now the rent received is taxed under taxed under business and profession. The rent received is taxed under business and profession. Not only that, but that residential quarters is actually in connection to business, right? Is subsidiary to business to help the business purpose. So on the residential quarters also depreciation can be claimed. So what is the eighth point I talked about? Compulsorily you should claim depreciation. Second thing, if any assets are there which are subsidiary to business, on that also you can claim depreciation, like residential quarters, a specific example. Okay, clear to all of you? I don't feel you should have any doubt. Now see the fourth and sixth point together. They both talk about partly for business. Now suppose there are my friend and my example. He is also doing, I am also doing business. So that portion which I am owning, on that I will claim depreciation. That portion which my friend is owning, he will claim depreciation. Sometimes it happens that I use the asset partly for business and partly for personal. Suppose first floor I am staying and ground floor I am using it for business. So whatever used for business, on that you claim depreciation. What is the problem? Personal portion you cannot claim depreciation. Personal portion you cannot claim any depreciation. Only on the business portion you have to claim depreciation. Right? Suppose there are certain assets like standby equipments. Like in every house you may think that there is something called as inverter, electricity inverters. Right? If you stay in apartments, you would have seen generators. Now, are generators regularly used? No. If suppose there is a electricity loss, then they act as a stepney, or we can say standby equipment. Then they will be used. So, now generally you want to claim depreciation, the asset must be used for the purpose of business. The asset must be used for the purpose of business. But for these standby equipments, there is no such rule. If they are ready for use, you can claim depreciation. So for claiming depreciation, they must be ready for usage. So how many things we discussed? That you may be a beneficial owner, still you can claim depreciation. Depreciation is a compulsory thing. Without any option you have to claim depreciation. If suppose companies are there which are outskirts and they gave some residential quarters to their employees for staying, they are receiving rent. That rent is taxed under pgbp, and on that residential quarter depreciation can be claimed by the business, that we discussed. If you are partly using the asset for business purpose, then you can claim part depreciation also. Standby equipments, if they are ready to use, you can claim depreciation on that. Okay. I just forgot about 2 points, second and third. So let me explain to you that also. Second and third, second talks about in case of lease transactions. Now in lease transactions, that means long-term rent is called as lease in simple language. Okay. Now there are two parts. One person is the lessor, one person is called as the lessee. Right? One person is the lessor, second one is called as lessee. Now in simple language, lessor is the owner of the property, lessee is the tenant of the property. Okay. Now who should claim depreciation? Owner should claim, right? So lessor will claim the depreciation. Lessor is the owner, so he will claim depreciation, no doubt about it. Second point over. Third point actually talks about hire purchase agreement. Hire purchase agreements, here there is a hire vendor. Vendor means seller. And there is a hire purchaser, or we can use the word hirer also. So hire purchaser, hirer are one and the same. Now think about, actually the intention of hire purchase agreement is different. In case of lease agreement, there is no intention to permanently transfer. Right? That's why lessor, the owner, claimed depreciation. But in hire purchase, the vendor permanently wants to transfer, correct, to the hire purchaser. On the payment of last installment, the purchaser becomes the owner. So income tax also says one thing, no problem. In that case, let us allow hire purchaser to claim depreciation from the start itself. The day he starts paying the higher charges, he will have the authority to claim depreciation. Suppose example, I purchased a car. So when I am purchasing a car, it is hire purchase agreement if there is a loan attached. If I have taken a car from the showroom by taking some loan, then it is basically hire purchase. So in that case, what happens? I am the purchaser, I am using the asset throughout the year, so I will claim the depreciation. the car company or the higher vendor, the seller will not claim depreciation. Even though the purchaser did not become the owner, still he can claim depreciation. Why they made such arrangement? Because the vendor will anyhow claim the depreciation. Vendor will anyhow claim. Okay, for vendor there is no such depreciation and all. Chalo, what we discussed, higher purchaser will claim the depreciation. That's what you have to remember. For vendor, it is a sale transaction. So for him, he is the owner. So nothing as of now as depreciation. He will just collect the money in installments and he will show it as income. बस इतना ही था, कुछ नहीं था. Now I was thinking about the lesser lessee and I was thinking about one point which I have to share. Lesser will claim depreciation, I said, because he is the owner, and lessee, the tenant, will claim lease rent as deduction. Right? That was what my thoughts going into. Now let's understand. Again repeat. In case of lease agreement, who will claim depreciation? Lessor, the owner will claim depreciation, and lessee, the tenant, will claim lease rent as deduction. In case of hire purchase, the purchaser anyhow is going to become the owner on the payment of last installment. So from the start point itself, the hire purchaser is allowed to claim the depreciation. That's it. All the 8 points are done. Now let's go to the next page to understand that if it is not a power generating unit, right? You are not a power generating unit. You are not into electricity company. So for all such businesses who are not into power generating, how the depreciation should be claimed? The answer is quite simple. It is claimed on the basis of WDV basis, written down value. In accounting, we also call it as reducing balance method, diminishing balance method, right? But in income tax, we only use single word, that is written down value method. So I said there should be a block of assets. So what is that block? That block is defined in section 2 clause 11. Already I discussed that building is there, furniture and fixtures are there, plant and machinery is there, intangible assets like know-how, copyright, patent, trademark, license, franchisee, any other business or commercial right, like I said, route permits for travel agencies, and many others we will discuss later on in the chapter. As of now you remember, but please remember, land is not forming part of block of asset. It is not depreciable. Goodwill is not considered as any other business or commercial right. It is not forming part of block of assets. That's it. This time MCQ question may also be asked, important. Okay. Now come to the next point. How to calculate the WDV? WDV for newly purchased asset. For newly purchased asset, actual cost is the WDV. For newly purchased asset, actual cost is the WDV. But for what about all other old assets which are continuing from few years, right? For them, we have to calculate the WDV. How to calculate? Let's see. Opening WDV we should take. Add purchases we will do, or any additions are there, we will add that. Sometimes what happens, even without purchasing, some additions happen. Why it happens? What are that situations? I'll teach when further section 35 comes. As of now, you remember that opening WDV we will take, add purchases we will do, from that we will deduct sales, and then we will get the closing WDV. At this, how we should remember, like a small child. कैसे बोलता छोटा बच्चा? Opening WDV, add purchases minus sales, and we get closing WDV. Like that you have to remember. बच्चों के ऐसा पढ़ना, right? And when you remember, you try to learn subject like a kid. without any tension, without any stress, you'll remember more. Do that, right? So how to calculate WDV for not newly purchased asset? For newly purchased asset, it is simple actual cost, but not newly purchased asset. Opening WDV, add purchases minus sales, will get closing WDV. From that we will deduct depreciation, and when we deduct depreciation, we get opening WDV for next year. Right? This way you should remember. Now, sometimes what happens, we purchase new assets. When we purchase new assets, what we do? We purchase new assets, we have to check when you purchase the new asset. Is it? Purchases is not important. What is important? Did you purchase the asset in the current year? Yes. Right. Second question. Did you use the asset for more than or less than 180 days? So if you used the asset for more than 180 days, then you can claim full depreciation. If you used the asset for less than 180 days, then half depreciation. Now please remember, you have to put the dates. Suppose example, you purchase the asset in the month of November. Then what will happen? November, December, January, February, March. Only 5 months. So 5 months means 150. So in that case, what will happen? Usage should be checked. For counting the days, usage is important. Not the date of purchase. Usage is important. Right? So in the year of purchase, please remember, in the year of purchase, this is very important. This game, always remember one lesson. In the year of purchase, if the asset is used for, that means from the date of usage, start date of usage till the next 31st March, if it is less than 180 days, half depreciation. If it is more than 180 days, then full depreciation. Suppose, sir, it is not the year of purchase, then we use it for less than 180 days, then full depreciation. That means half depreciation concept is only for the year of purchase. The answer is yes. Chalo, I'll put it in more sequential way to understand. Every time what you do, you purchase a new asset. You bring it to the factory, right? When you bring it, you purchased it. Now it's over. Now you may start using from the date of purchase, or you may start using later on. Suppose in the year of purchase, you used it for less than 180 days. Then claim half depreciation. In the year of purchase, you used it for more than 180 days. Then you claim full depreciation. And how to check? So check the date of usage from that date till next 31st March. If suppose it comes less than 180, half, more than 180, full. But this is only for the year of purchase. Why I am telling so many times, you should remember, that's why. Suppose the year of purchase is over. Now it is subsequent year, second year, third year, fourth year. Then irrespective of the number of days of use, you always claim full depreciation. Irrespective of number of days of use, you always claim full depreciation. Irrespective of number of days of usage, you always claim full depreciation. Now let's jump into the rates of depreciation. This you will practically understand when we do illustration number 1. There are loads of questions, right, to practice this. So अभी के लिए इतना ही you have to remember, and rates of depreciation let's go through, and चलो start करते हैं. Hey, rates of depreciation, this is something which you have to remember. Simply like, I will not try to help you in remembering, but try to play the game and remember. Residential building 5% is the rate. Commercial building like shop, godown is there, showroom is there, factory is there, 10% is the rate. Temporary structures are there. Sometimes you have to construct a very big building, So for the time being, small structure you created, so temporarily, which you will just destroy within 1-2 years. So that are temporary structures. 40% rate. Furnitures and fixtures are there. Furniture means you will say table are there, chairs are there. This furniture. But cupboards are there, na? Electrical fittings are there, na? That are fixtures. 10% is the rate. Generally, plant and machineries we give 10%, 15% general rate for plant and machinery. If in the exam they don't tell plant and machinery what rate, or they don't tell specifically plant and machinery is for this, then remember that general plant and machinery rate of depreciation is 15%. Okay. Suppose motor car is there. Motor car you are not using for hire business, then 15% is the rate. Motor car not used for hire business, 15% is the rate. But suppose you purchase that motor car between 23rd August 2019 to 31st March 2020, during this period, 23rd August 2019 to 31st March 2020, then you will give additional 15, that is 30%. That's why I put it inside the bracket, you can check. Okay. Now, suppose if plant and machinery is purchased, used for hire business. Wo, on the autos you can see for hire, right? When you see Uber, taxis and all, green color boards are there, right? Name plates are there in Hyderabad. So what they are showing? They are showing that they are used for hire. If it is the case, normally 30% is the rate. So motor car on hire, 30% is the rate. But suppose you purchase the same motor car between August 23rd to August 21st 2023 2019 to 31st March 2020, then for you the rate would be 45%. So generally motor car not used for hire 15%, but used for hire 30%. But if it is between 23rd August 2019 to 31st March 2020, add extra 15, that would do. Books always 40%, whether it is annual publication, whether used by business, whether used by professional, no differentiation, everywhere 40%, fix it in mind. Air pollution control equipment, water pollution control equipment, computers are there, right? Life saving equipments are there. For all these 40% is the rate. Aeroplanes are there, 40% is the rate. So all these 40% you keep one place and remember, right? Semiconductor chips, this time very important, right? 30% is the rate. Ships are there, kitna hoga? 20% is the rate. Ships, boats. Oil wells are there, 15% is the rate. Like that you try to remember the rates of depreciation. कितने बार भी पढ़ेंगे याद नहीं रहेगा, right? If I repeat in the class, but 40% you put it in one bracket, that will easily help you. All others you try to specifically remember. That would be okay. Now, if you sell a depreciable asset, so here please remember, in accounting we sell one asset, they check that we got profit or we got loss. But in income tax it is not one asset. In income tax we always check block wise, gain or loss. So that's why when we talk about capital gains on depreciable asset, we have to divide into two parts. Did you sell the whole block or did you sell the part of the block? The treatments will differ, right? Capital gains on depreciable asset. Did you sell the whole block, all assets, or did you sell some assets that is part of the block? Suppose you sold the whole block and your sale consideration is greater than WDV. Now you got more money, right? Then it is gain. Now should it be short term or long term capital gain? It is short term capital gain. So depreciable assets are always short-term capital assets. Please remember, in capital gains I'll teach that, but as of now here we have to solve some problems, so I am adding. Simply remember that depreciable assets are also capital assets, right? On that we should understand that they are always short-term capital assets. So if we get any gain, it should be short-term capital gain. Suppose sale consideration is less than WDV, then it is short-term capital loss. So because sale consideration is less, WDV is more, so we got loss, short-term capital loss. And there is no asset, right, in the block. So what will you do? You have to settle it out, either gain or loss. So if you sell whole block, your result will always be either gain or loss, right? Whether it is short-term capital gain if it is sale consideration more than WDV, short-term capital loss if sale consideration is less than WDV. What if you sold part of the block and sale consideration is greater than WDV? Then you got gain, right? So short-term capital gain, and further there will be no depreciation in the block. Okay, so you sold part of the block but the sale price is more than the WDV, then you will simply consider it as short-term capital gain and no further depreciation. But suppose if you sold part of the block and what happened is sale consideration is less than the WDV of the block, then what will you do? Still there are certain assets, right? Part of the block sold, some assets are there and some value is also there, right? Sale consideration is less than WDV means sale consideration would have covered only that assets which are sold, and some assets which are lying, maybe sale did not cover it. So that's why we can claim depreciation here. So for claiming depreciation, only two conditions, please remember here. One, in the block there must be some asset, and in the WDV there must be some value to claim depreciation, right? When you see sale consideration was greater than WDV in part of the block, what happened? Part of the block, sale consideration greater than WDV, there are assets but no value to claim depreciation. That's why we said short-term capital gain and no depreciation because there is no value. But here part of the block sold, sale consideration less than WDV, so what to do? Arey yaar, you have assets and you have some value in the WDV to claim depreciation. That's why you claim depreciation. I hope you understood what I tried to convey. Arey, during numericals illustration number 1, we'll do lot of questions. You will get super confidence. Okay. Now, as we understood capital gains, let's also understand what is additional depreciation. Whenever you go to a store, he will say that this is the discount. And what will you immediately ask? Sir, kuch additional milega? Can I get some additional? And when the all businessmen, taxpayers asked government, please give additional depreciation, government said tathastu, you will get additional depreciation. Now who are going to get? Of course those who are into manufacturing of any article or thing, right? If you are into business, then only you will get. Service businesses will not get additional depreciation. Like I am into coaching, so if I ask for additional depreciation, government will chalak, get out, you will not get depreciation. Service businesses will not get. Deloitte will not get. KPMG will not get. Reliance Industries will get. Reliance Petrochemicals will get additional depreciation. Are you able to understand what I am saying? So only for the manufacturing units additional depreciation is given. Right? Second thing, if you are into generation, transmission, distribution of electricity, Reliance Power, Tata Power, they will also get additional depreciation. So who are going to get? One, who are into manufacturing. Second one, generation, distribution and generation, transmission and distribution of electricity. Now, before 31st March 2005, there was no concept of additional depreciation. So, if you have purchased a new plant and machinery after 31st March 2005, you will claim additional depreciation. Before that, if you have purchased, you cannot. That you have to remember. And also remember that you cannot get additional depreciation on building, furniture, fixtures, intangible assets. No, 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 no. Only on the plant and machinery you will get additional depreciation. But then government said we'll give some more exceptions. If your plant and machinery is a road transport vehicle, if your plant and machinery is a computer used in office, your plant and machinery is a ship or aircraft, your plant and machinery is something which you use in residence, office or guest house, right? If you are using a geyser in your house, heater, pani heater karenge, right? We will use water to heat, we want water to be heated, so we are using geysers, right? We are using ACs. Nah, on that no additional depreciation. Suppose scientific research equipments are there, they get 100% depreciation. Or under section 35 AD, like cold chain facilities are there, right? They also get 100% depreciation. Oh, deduction. So no additional deduction will be given, depreciation will be given if you are into that. So road transport vehicles, ships and aircraft, residential, office and guest house dwellings, office equipment like computer, printer, laptops, right? Then if you have claimed 100% depreciation on certain assets under section 35 mostly, you will not get any additional depreciation. So you should understand, it should not be these assets, right? It should not be a service oriented undertaking. It should be manufacturing. It should be generation, transmission and distribution of electricity undertakings. Then what should be the rate of additional depreciation? 20% is the rate of additional depreciation. Somebody who is studying 35%, I will tell you, seriously I am telling, that are outdated books that you don't read. 35% is an outdated provision. It is not applicable for our exams. Even CMA latest books have that. They will tell that this provision is applicable till this date, and you check that date. What it will tell? हो गया, वो डेट खत्म, अरे क्यों पढ़ा रहे हो भाई, क्यों परेशान कर रहे हो हमको, right? So please understand that you should ignore that 35% related provision. Only 20% is the additional depreciation. Suppose additional depreciation, how many times we get? Only one time you will get additional depreciation. It is not every year like a normal depreciation. It is only one time depreciation. Okay. How much rate? 20%. On what it should be calculated? Are one time in the year of purchase, on actual cost it should be computed. So additional depreciation is given on the actual cost of the asset. Suppose in the year of purchase, the asset is used for less than 180 days. Then you claim 10% additional depreciation this year and balance 10% you can claim next year. This is the only facility. Otherwise 20%. Okay. So this is claimed in the year of purchase. If it is used, asset is used for more than 180, used I said, don't check the dates from the date of purchase till next 31st March. No, from the date of usage till 31st March. And if suppose date of usage is not given, then take date of purchase to 31st March. Okay. Less than 180 days, 10% this year, 10% next year. If more than 180 days usage, total 20% this year itself. Now I'll tell you some things which are not written here. when you do main problem of pgbp, you deduct normal depreciation. While computing business income, you have to deduct the normal depreciation, which we discussed in the just few minutes back before additional depreciation, right? That we call it as normal depreciation. And you also have to deduct additional depreciation. So these two are deductible expenditures for computing business income. Not only that, these two will be allowed as deduction for computing the opening WDV. I said na WDV we will compute opening WDV, add purchases minus sales, then we get closing WDV. From that depreciation should be deducted. Array that depreciation is normal and additional both. Okay, and then you get the opening WDV for next year. So I feel there should be no doubt in your mind relating to additional depreciation. The special privilege given to Telangana, West Bengal, all are gone. 35% is gone. Textbooks still show it. We will not read. फालतू के चीज नहीं पढ़ेंगे, right? Such commitment should be there. अरे यार सिर्फ पढ़ने की commitment थोड़ी चाहिए, right? Only to read we will have commitment. No, for not reading also we should have commitment. We will not read something which is not at all important. Okay, right? With this additional depreciation we did. Now let's go to the next part, and that is power generating units. Whatever we discussed till now, all are applicable to undertakings which are not power generating, and they are also applicable to power generating units, no doubt about it. But power generating units have some specific provisions which I am going to teach you now. Please remember that, and considering these provisions of power generating units, all other provisions will also apply. Now I will tell very simple things. Power generating units are given an additional option. You can actually opt for the regular WDV method for claiming depreciation. And if you feel that no, we want straight line method for claiming depreciation, okay, you can also claim depreciation on straight line. It is not this and that both. It is only one method. You follow either WDV or you follow SLM. Only one will be allowed. Now, what is best? It is your choice. But please remember, you have to decide this before filing the income tax returns. You have to decide this before filing income tax returns, before the due date of filing returns. That too, I have to tell you one very important thing, that there are two types of assets. One is tangible and second one is intangible assets. Like when I talk about patents, copyright, trademark, license, franchisee and any other business or commercial, right? These are intangible assets. For this compulsorily WDV method only. So only, okay, intangible assets compulsorily WDV. Array, your power generating unit still only WDV. But if it is a tangible asset, then you have a choice that WDV or straight line. That too you should decide before filing the income tax returns, due date of filing returns. Okay, this is quite normal. It's theoretical question. One MCQ question may come. But numerical problems will come on the sale aspect. If you sell the asset, what you do? You have to decide profit or loss. Right? Okay. Before I go to that, now if for tangible assets you decided WDV method, then you can claim additional depreciation also. But suppose you decide that I want to go with SLM method for tangible assets, then please remember that you will get only normal depreciation and no additional depreciation because you are following SLM method. Now when you sell the asset, sale consideration we will write. From that we will deduct WDV, return down value. Whatever is the WDV balance after depreciation, that we will write. Sale consideration minus WDV, when we do, we get some balance. It may be positive, it may be negative, correct? Suppose example, your sale consideration is 1 lakh rupees, WDV is 1,20,000 rupees. So negative or positive? अरे लॉस में बेचे ना, 1,20,000 worth item you sold for 1 lakh, right? So sale consideration 1 lakh minus WDV 1,20,000. So negative will come. So when it comes negative 20,000, that should be terminal depreciation. That should be claimed as what? Terminal depreciation. Right? Terminal depreciation again you can claim as deduction in that year. Now suppose your sale consideration is 2 lakhs and your WDV is 1,20,000. Now what will happen? The result is positive. Sale consideration 2 lakhs, WDV is 1,20,000, so positive 80,000, correct? So when you get positive 80,000, there is a question again. Is the sale consideration greater than original cost? Hey, after this calculation, after getting 80,000, sale consideration 2 lakhs minus 1,20,000 WDV, 80,000 is the positive balance. Now stop and then check that sale consideration 2 lakhs. Compare with original cost. Original cost, not WDV, original cost. Okay, the purchase price of the asset. Sale versus original cost. If sale consideration is greater than original cost, then treatment will be different. Sale consideration is less than original cost, then treatment is different. Okay. So as of now, this 2 lakhs sale consideration is less than the original cost. Right? Then what will happen? Then simple, sale consideration 2 lakhs minus WDV 1,20,000, 80,000 will be your balancing charge. Now what is balancing charge? It is simply pgbp income under section 41. Right? pgbp business income under section 41. Okay. So you will show it as income, add to the incomes. When you do add minus problems in pgbp, long problems, there this income will be added. Okay. 80,000 will be added. Suppose example, your sale consideration is more than the original cost. Let's assume that your original cost is 1,50,000. Then what happened? Your sale consideration is more than original cost. So sale consideration minus original cost, that is 2 lakhs minus 1,50,000, will be treated as your short term capital gain. And original cost 1,50,000 minus WDV, that is 1,20,000, will be treated as, that 30,000 will be treated as your balancing charge, business income. So what they wanted to tell, their simple funda is, you get anything more than original cost, it is a capital gain, short term capital gain. So original cost as 1,50,000, sale consideration is 2 lakhs. So you got more than original cost 50,000. So that 50,000 is your short term capital gain. And you have something which is more than WDV up to original cost, that becomes your balancing charge, business income under section 41. We'll solve some problems on this additional depreciation and also on power generating units, so that you will get the confidence. Okay, practice makes man perfect, so do it. And any doubts are there, WhatsApp me. I am there to help you all. I want you to become successful. In this video, we'll put an end to this part, and in the next video, we'll do the balance provisions. Okay.